Will continued rise in interest rates ultimately increase cap rates and therefore reduce sales prices, or will buyers take on tighter spreads on yield and take on more expensive capital? My name is Jonathan Weir. I'm a first vice president at Marcus & Millichap, focused on multifamily sales, and I'm here to break down a couple scenarios that might play out in the next few months. Here are some facts. The 10-year treasury as of today sits right under 3%. And mortgage rates and borrowing rates generally trend 200 basis points or roughly 2% above the 10-year. Historically, these both have aligned and kind of moved at the same time. So as 10 years go down, borrowing rates go down. As the 10-year goes up, borrowing rates go up. I went on CoStar, which is a massive research software for commercial real estate, probably the largest in the industry, and pulled the last 6 months of multifamily properties sold. I identified that the average cap rate was 3.8%. Keep in mind, all these deals that sold were put under contract with borrowing rates between 3.25% to 3.8%. So the borrowing rate, like the interest rate, was slightly below or at the same as the cap rate. I then looked back at CoStar, the same software, between 2017 and 2018. The reason I did that is because back then, the 10-year treasury also sat at right under 3%. Looked at the same study, same geography, and same type of product, and the average cap rate was 4.3%. So what does that tell you? Does that tell you that cap rates are going to be trending up to 4.3 or 4.5%? Who knows? It is kind of a coincidence. Now the interest rates are about 4.5 to 5%, the same as they were in 2017 to 2018. So my question to all of you is, are the cap rates going to go up? If so, that most likely means pricing will need to adjust. Here's a simple behind the napkin example. We'll put the equation right up on the screen. So if the net NOI, the net operating income, is $50,000 a year at a 3.8% cap rate, that's roughly $1.3 million sales price. Take that same NOI of $50,000 a year at a 4.5% cap rate, it reduces the price to roughly 1.1. So pricing goes down about $200,000. This theory suggests that with interest rates rising, pricing will have to decrease. Who knows if that'll happen? The other alternative, and the reason I'm making this video, is we could see the same property still sell for that $1.3 million, but buyers are now borrowing at 4.5 to 5% with significantly less leverage and zero positive, in fact, negative spread on their leverage. You know, if we still see the demand like we've seen in the last 2 years with multiple bids on each deal, FOMO, you know, investors have FOMO about inflation and rent increases and don't want to miss out, or just the huge demand to invest in multifamily, we could see no adjustment in sales price. The Feds plan to meet again in June and July, and have stated that in both those meetings they will raise the interest rate. I'm not here to tell you exactly what will happen or what won't, but you know, now is a critical time to figure out what kind of adjustments you can make to your portfolio, whether that's, you know, shedding some fat, making some 1031 exchanges, or refinancing. I would highly consider that. My suggestion for those who are in a position to do something is to ask yourself, do I want to offload my property in the next 2 to 3 years? Can I be patient? Perhaps the best thing to do is nothing. But if you're looking to sell a property or complete a 1031 exchange in the year 2022 or even next year, I think time is certainly of the essence. I think that we know for certain right now where pricing's at and how buyers and sellers are behaving. And I think the later on in this year and perhaps next year, you know, things might not be as gravy as they are now. If you have any questions about what's going on in the multifamily market, our team has sold just over 80 million in sales this year, 2022, with 46 million either under contract or listed for sale. We're happy to be a resource for you. Thanks.